Hey there, it's Les Solgrove, Simply Des Moines Market Values. It's the 1st of September, which means we're going to talk today about what happened in the month of August. We're also going to start the show this week with a recap of the last 11 days after the state fair to see how that ended up. And there's a little bit of talk today about mortgage interest rates. So it's a big show. So grab some coffee. Let's jump right in. Well, good afternoon. It's Sunday, September 1st, week 35. It's what I'm going to officially say it's the unofficial ending of summer. So, how's that first off? It really is. I mean, everybody's back to school. Football started, both college and NFL starts here next week. So, let's just kind of put ourselves in the minds of the final 4 months of the year and kind of see where we were at year to date so far. So it's going to be a big show. So let's take a peek here. First of all, at the Iowa State Fair, there's all kinds of records, achieved this year with attendance. A lot of that has to do with the cooler weather that we had. It was really a great year to go to the Iowa State Fair. Almost almost a little over 10,000 more people showed up over the 11-day run this year. And then, of course, all the food and stuff. So if you didn't get a chance to go to the Iowa State Fair this past year, be sure and go back next year. It's going to be a great repeat, I think, of this year coming up next year. So, all right, so let's take a peek at the number of homes, the listings taken, number of listings taken. And the first thing you got to notice is right over here, 462. Normally, we see a bump. In fact, traditionally and historically, we've seen a bump after the Iowa State Fair, that 11-day period after. This year, we actually saw fewer listings come on the market. We had 504 the week before, which was fewer than during the week, 505 during the week, and then 462 the week. When I say week, I'm talking the 11 days before, 11 current, and 11 days after. 462 come on the market after that time period. So, um, it's just the type of market we're in. We're just seeing a little bit of different activity, and mortgage interest rates really started to drop during the fair as well, which maybe these are not number of homes on the market. This is actual number of homes added to the market. So it's kind of a hard one to understand and explain. Um, but I did want to kind of go over here and show you a little bit about how the sale pendings were affected. Now, first of all, I have the overlay with the mortgage interest rates and over the years, and you can see again from 2017 the average rate for the 11 days during the fair was 3.9%. Last year in 2023 it was 7%, and there was the sale pendings were down a little bit from last year, well, quite a bit from last year. We're actually seeing even more sale pendings dropping this year. During the state fair, the average interest rate was just under 6.5%. Now we'll talk a little bit more in the show about where rates are as of today, but during that fair, 6.5% was over a 0.5% lower than where we started a year ago at this same time. Let's get rid of that and just look at the business that happened, focusing on these last three column charts here on the far right. Um, the weather definitely made a difference, I think, with the state fair. I think that more people were actually out to the fair than they maybe were out looking at homes, and the fact that we had also a slowing home market also probably, was the cause why we only saw 301 offers accepted during the Iowa State Fair. 431, we did get a bounce back the following week as far as accepted offers. And a lot of that has to do with the fact that mortgage interest rates came down and are continuing to come down. And I think we're going to see that path, and we'll take a look at that again as we look at the end of month and maybe get some ideas of what we can expect as we move into September here. But anyway, that's kind of the last bit of information I wanted to bring to you from the Iowa State Fair. Listings were down from the 11 days after the fair, but sale pendings had rebounded, and actually it outpaced the first 11 days prior and during the fair, which is fairly typical, as you can see. So as far as offers accepted, that's a good sign there. So, all right, that was the fair. Let's talk about the end of the month and end of August. And this is, again, the column chart showing you the number of homes listed for the month. So this is the number of homes added during the full month of August, and we had 1,046. It was nice to see that this number actually increased. We've been kind of on a downward trend here the last 3 months, very slightly, but it's good to see that turn back up. And if you look at the black line there, that's 2023. You can see that, we typically see inventory kind of level off around July, August, and September, and then it drops off at the end of the year. I think what we're going to see is probably some of this inventory continue to rise a little bit as we move in toward the end of the year, just based on the fact that mortgage interest rates are coming down, and it seems like that's going to help spur some seller activity out there. So 1,046. And um, looking at this from the list price perspective, another good sign is, and we're following pretty much right on track. The little dashes show you 2023. We're following right on track, kind of where we were last year. Last month we were at 369.9. That was right at where the median list price was a year ago. We're at 365 in August, and that's again just right exactly where we were last year. So we're seeing some some repetitive normalcy, which is maybe comforting to know. Um, do expect pricing to kind of continue to drop as we get toward the end of the year, November, December, kind of level off around that 350 last year. So will we hit that 350 on median list price? Maybe, the way things are looking, I would say that that's very possible. So as far as the number of homes for sale versus the number of pendings by the price range, this is kind of the activity. This one shows you where the activity is in the marketplace. And the big winner here was, you can see that we brought in the bulk of our listing inventory in the month of August in that $300,000 to $400,000 price point, which is kind of that entry level new construction. But we also saw good gains in the $200,000 to $300,000 price point. So we brought in, twice as much inventory that we went under contract. And so when you see more inventory versus pendings, this is one of the reasons why our inventory is growing over the years. Even though we may have slower sales, we're actually starting to replace some of that lower priced inventory. And I think that's a good sign. You get all the way up to the higher end stuff. In fact, you look here at that 900,000 to $1 million price point. There were no homes sold in the month of August or that went under contract. There might have been some closings, but no homes that went under contract in that 900 to $1 million price point up here, and really relatively, few above 700. It's 13, 20, 13, 0, and 14. So those are the slower price points as we move toward the end of summer and getting into the fall. So most of the activity again always typically sticks around here between that 100 and $500,000 price points. As far as pending sales go, here we go again, looking at the spaghetti line, which is the last 3 years, to give us some kind of an idea of trending versus the sale pendings. And these are the number of homes that went under contract each month. So 1,053 went under contract in August, and where we saw inventory kind of climbing on the listing side, we're seeing actually sale pendings start, the number of homes going under contract still declining. We saw pretty much the even number last month, 1106 to 1105, but now we're under 1100. And I think it's very possible with lower interest rates coming into play, again, that we might see this outpace last year. We're right at where we were last year, as you can see with that black line. I think we're going to probably outpace, and that would basically give us a good ending for the year to see kind of where we're going to end up 2024 with. So we'll watch that one. Again, looking at the comparison of newly homes listed versus pending, 1,046 were added to the market in August, and 1,053 were actually pended. So we're pretty much just right even with that. once we get, in fact, I guess you could technically say as soon as we get above what we're doing in sell pendings, we would be in that inverted market, which I'm not going to plan on bringing back that chart this year unless it really goes out of whack here. But we're currently listing more homes than we are selling them, and it's kind of crossing over there. You can see that the number of homes listed were below that pended counts all the way up and through August, but awful darn close here. So as far as months of inventory and by price point, again, we're in a seller's market all the way up to $400,000 price point this month as of the end of August. Once you get above 400 to right at that $700,000 price point, we are in an even market, which I'm sorry, you know what? I think I got those colors backwards this month. I'll have to fix that I'll fix this in the graphics here. 4 to 6 months should be in the dark, showing up in the dark blue. Anyway, you can see that we're in a different market, that this is balanced market, and this would be a seller's market. And somehow my colors got screwed up. The one thing I do want to point out here is that $800,000 to $900,000 price point is always kind of a slow market, as well as that $900,000 to $1 million price points. Last year we were at 27 and a half months inventory, and I just didn't, if I let the scale take care of that, all these numbers would look pretty darn low. Um, and so I didn't do that. I just showed you right here at 27 and a half months versus 5 months. So we had a little good news in that $800,000 to $900,000 price point, but when you get above that million again with no sales, then there's essentially however many homes are on the market is that months of inventory. And it just displays on this graphic as zero here. As far as homes closed by month, again, the spaghetti market with the column chart, we are behind last year for the month of August. We did 1102 and we were above that last year. We are basically behind pace. We'll see this when we look at the closed sales, but we're behind pace pretty much across the board as we move into the end of the year. So as far as talking about closed sales, we're currently at 8,590 homes under contract and that have closed, not under contract, but have actually closed year to date as of August 31st. And, this is kind of just showing you that stair stepping. We sold, how many we end up closing each month and how this kind of shows up year to date. But if we look at an overlay now and add where we were last year, this is 2023, you can see that, last year we were at 87, let's see, 87.21. So we were a little farther ahead last year than we were this year, 98.33 at the end of September. It's going to be hard for us, I think, at the pace of sales for us to break into that 10,000 mark, even in the month of September. It's probably going to be early October, unless something happens with those pending sales that they tend to close quickly, and we have a push of those with the lower rates. So you can see this is basically the time of year we do start to slow down as far as closed sales. Year end, we're still probably going to be pushing hard to come anywhere close to 14,000 closed sales this year. It's going to be closer to that 13. I'm hoping that we do break 13,000 at the end of the year. But it is what it is. I'm not going to try to make excuses. It's just we take the market as it is. As far as pricing goes, the month of August, the median sale price held pretty steady versus last year. Whereas you look at the little dash lines here, we saw a rise in median sale price a year ago. And in fact, it rose again in September last year. I think that we're finally starting to see a little bit of a softening of the median sale price, and that's going to give buyers a little more confidence out there to maybe jump in, especially with low mortgage rates. However, with low mortgage rates, on the flip side, you could argue that if they can afford more, maybe they'll buy higher, and that might keep those prices up. So we'll see what happens there. But days on market, we're at 16 days on market. It's the slowest pace we've seen since all the way back in March, and when we had 29 days on market, and when it's typically in the middle of the winter period, months are much longer there. But we're certainly not used to seeing 13, 14, 15, 16 days on market from the last couple of years, especially this time of year. But that's where we're currently at, is 16 days on market. far as list price to median price, this is the asking price, 365 at the end of August, and the negotiated median price was 296. So you can see there's a, we still have quite a bit of higher priced inventory out there, but home buyers are typically buying a little bit lower pricing, and that's fairly typical in any year. Um, the pricing are what they are, but again, with that maintaining that pretty consistent 297.5 to 296 right here, I think we might see that. Uh, like I said, it could go down, it could go up. It just depends on what happens with the buyers out there and whether they use that newfound ability, purchase ability, if they use it to buy a house or if they stay steady and continue to kind of knock some of the pricing down when they go to make an offer. So, as far as homes prices versus price reductions, these are price increases versus reductions. Again, continuing to see price increases. However, the increases dropped a little bit this month at 100 price increases of properties. Price reductions also decreased a little bit this month. 1570 was the July month, or July number. We're down to 1341. And that's off of what we typically do. We're fairly steady typically the month of June, July, and August as of last year, but this year we're kind of seeing things maybe trending up and down a little bit. So I think that we're going to probably see some price adjustments as we move forward. But again, if interest rates are a factor, that might give some home sellers some confidence to stick out the time with a little bit higher pricing, at least until we get near the end of the year. All right, here's a specific graphic, and this is a month-end graphic that I watch on a weekly basis as well. It's the back on market percent by month, and we've seen the homes that come back on the market has been on the rise this year. And on a weekly basis, this rate is actually a little higher, but when you look at it over month, we're currently at 24%. And we usually like to see somewhere around that 18, 19% rate of return, coming back on the market. Actually, we'd love to see no homes come back on the market. But when I say we like to see it, that's kind of what the normal is. And we're above that this year. We're actually seeing, more homes coming back on the market, although for the month of August, we're pretty much spot on where we were a year ago. As we move toward the end of the year, there are traditionally fewer sales, and the fewer sales that come back on the market and the inventory growing is going to make this bomb rate, this back on market rate, probably drop back down again. So that's one thing we'll watch. Okay, mortgage interest rates. Oh boy. As we move into September, the Federal Reserve is talking now almost guaranteeing, there's no such thing as a guarantee, but we're as close to a guarantee as we can ever get here, that the Federal Reserve rate is probably going to come down by at least a quarter of a point in September. I've read a couple of reports that say a half point in October and a quarter again in November before the end of the year, which would mean that the prime would come down by a full percentage point. And by doing so, that's going to give probably a lot of investors out there some confidence, and also um, indirectly affect mortgage rates. This past week, we saw mortgage rates at our 2024 year low of 6.35%. And that's a swing, not quite a full percent from earlier this year of 7.22%. But I tell you what, it's welcomed. It's very, very welcome to see this rate come down. And I honestly expect it to keep coming down. I hope I have to adjust the scale over here, because the scale starts at 6%. That would be a wonderful thing, as if I had to adjust my scales down to 5.5 or 5% to start to see what's happening under 6%. And I really, really am looking forward to that. But you can see that we're in a totally opposite dynamic with mortgage interest rates of what we saw last year, where we were going in around that end of June, 1st of July, August months. We started to see mortgage interest rates rise. And then as we got into the latter part of fall, we saw interest rates just, I wouldn't say skyrocket, but they really were consistently rising, and almost got up on the weekly level, almost got up to 8%. And boy, I tell you what, we're glad we're not going to be probably seeing that this year. This may or may not be affected by the election. Who knows? I'm not even going to go there. but we're in a much, much better place as far as where mortgage rates are today versus a year ago. And you can kind of see that same spaghetti line graphic here, looking at the light blue is 2023, where we're coming down and last year was going up. It would be really, really well if we could actually get below 2022 numbers as we move into the fall. We haven't been below 2022 uh, interest rates since rates began to rise here in early 2022. So we'll watch that. The old adage again that sometimes is true that inventory chases mortgage rates. It was true in 2023 as interest rates went up, so did inventory. And then as rates went down, it took a couple of weeks and inventory started to go down as inventory started to be bought up. We kind of bottomed out or leveled off with inventory a lot of the time here. A lot of the uh, thought process here was home sellers and home buyers kind of felt like, well, maybe this is where we're going to be for a while. And inventory kind of started to react to that and started to rise. In fact, it's risen for the most part every week until this past week here of this year. And you can see that our inventory levels are actually down just a little bit this year, this week. Uh, this is a weekly graphic here interpretation. Again, because the mortgage rate numbers don't come out until Thursday of each week. It's always about a lag of a week before it catches up. And so next week, this is at that point, what was it, 6.34? I can't remember the number back. But I would like to see this red line continue to drop here and closer to that, into that 6% nines there. So under 6%. As far as buying power, this is the most powerful graphic of the interest rates line here. 321,000 is your buying power this past week on a $2,000 principal and interest payment on a 30-year fixed rate mortgage. Principal and interest only with 6.35. There's that rate. 6.35% would allow you to fund a $321,400 mortgage, and the low point on that at one point was 294. It looks like right here about week 18 when rates were as high as they were. So we've seen, probably a 23, $24,000, $25,000 swing in buying power since earlier this year, and that's much welcomed into the marketplace. All right, last two slides. Trying to keep this show short, but yet get everything in. I'm just going to focus this week on this show on the overall homes for the metro for sale. And again, this graphic here, we're looking at Altoona all the way down to Windsor Heights alphabetically, with Des Moines Metro kind of clumped in the middle there. Kind of shows you where the inventory levels are by price point. This is a great graphic to have when you're on a listing appointment, or if you're a home buyer or a home seller out there thinking about selling or buying. Where is your competition going to be? Really, anything under $100,000 that's in really, really, really great shape is going to get snapped up instantly because there's just nothing for sale. 14 homes in the Des Moines Central Iowa metro market here. That 100 to $400,000. This is where the bulk of our inventory is, with again that $300,000 to $400,000 price point, which is going to be combined with new construction and existing home resales. Has got the most inventory, except for Cumming, Iowa, which is kind of its own little market out there, more of an acreage market, higher end pricing. But for the most part, every single property category, again, with the exception of Cumming, and then also with the exception of Carlisle, when you get above in that $400,000 to $600,000 price point, there should be something out there for the most part for somebody to look at. Whether it's what they want to buy or not, there's something out there for them to look at. 2,626 homes in the metro for sale. And again, you can find this graphic and others at DesMoinesMarketValues.com. We'll talk about that as we end the show. The sale pendings, this is where the activity is happening. The last one was where the inventory is available, but this is actually where the home sales are happening. And across the bottom, again, that $300,000 to $400,000 price point is where the number of homes are going under contract is most prevalent. So as far as the the leaders in the sale pricing, it looks like, and I didn't look at this ahead of time, so I'm going to do this on the fly. Ankeny at 233 homes that went under contract in the month of August, and they had homes in every price point except for that under $100,000 price range. And then coming in second and third, very, very close together, was Urbandale and Waukee, 134,000 for Urbandale and 134 homes for Urbandale and 133 homes for Waukee. A little bit of zeros in both of those, but for the most part, those are our solid market areas of the metro that have the inventory and where the majority of the sales are coming from. A couple other notable areas here, obviously West Des Moines and Des Moines Northwest is, there's a lot of stuff that sold. In fact, they had 8 homes under contract in that under $100,000 price point. Nice to see Des Moines Northwest come in a little bit with triple digits there as well. So, all right, that is the show. Let me get my face off of here. There we go. Next week, I'm going to focus on the topic of a sense of urgency. We're going to kind of look at the marketplaces. I was looking at the number of homes for sale, the number of homes under contract, and where all the activity is. I want to kind of figure out, why is some price points moving? Why are some price points moving? And is it going to be a rise in reductions or a change in price increases? Are we going to start to see more new construction or less new construction come on the market? So it'll be focusing on that. I also had a call this week or an email this week asking about more data for the metro. So I'm currently working on updating the weekly or the metro to see if I can come up with some kind of a weekly metric that shows not only inventory levels on a weekly basis, but also maybe months of inventory or days on market and things like that. Something that'll help you out a little bit in a general fashion, but you still got to get out there as realtors and do your work and search for the comps, but at least give you some ideas of maybe where the activity is coming from. So where can you find all this? It's at DesMoinesMarketValues.com. I will say there are over 50 graphics loaded up to the show this week. I have all of the end of month graphics. I have all of the monthly graphics that were in there. That takes up about 30 of the show graphics plus the end of weekly stuff as well. So there's quite a bit of information out there for you to use. Go to DesMoinesMarketValues.com, click on that button that says take me to show graphics. This show will also be out there on YouTube, and it can be viewed each week by going, if you want to go back to that and look at previous week's YouTube shows, that's where you can go to get that. So just thanks again for tuning in. As always, if you enjoy the content and find it valuable, please hit that share button, hit the subscribe button, and hit the notification bell. Those are a lot of little things to do, but it'll help keep you up to date and informed when I drop a new show and when new information comes out, because your support certainly helps my channel grow. I'd love to see you subscribe. I really, really want to grow this channel even more. I have a lot of viewers that tell me they watch this show as real estate officers, watch this show as a group. So my subscribers might be a little bit higher if each of you would go out there and hit that subscribe button. Please do that for me. It helps me get this show out there. So enough begging. Whoops, sorry. Enough begging. That's the sign. The light started to go out. We will see you all again next week, and take care and enjoy this beautiful weather we're supposed to have. Talk to you soon.